So as a homeowner, I get my tax bill twice a year, and I look at it, and if it's roughly the same as it was the year before, I'm okay, and I go ahead and pay the thing. But it's probably a better idea than my way is to understand what's on that property tax bill. Walk us through what some of the pieces are: the appraised value or market value.
So this is usually going to be the first value you see if you look online or on your tax bill, and this is the full market value. This is what the auditor thinks your land would sell for if it was being sold to a willing buyer with adequate time and knowledge to consider that sale. So if we put it out on the market, this is what we at least think it would bring.
CAUV value is important for farmers to fully understand that.
Yes, so our CAUV value, in contrast, does not at all look at what things are selling for. Instead, that is determined by a calculation that is run by the Ohio Department of Taxation, and that is based on a net income divided by capitalization rate calculation. It's sort of complicated, so we won't get into the details, but
Here, I'll explain it.
yeah, but we'd be here for an hour. But basically, it takes into account the productivity of your land and values it just for its agricultural productivity, not for what it would sell to put a house on it or a business or a shopping mall.
Taxable value.
So taxable value is important because it's what we actually apply your tax rate to. In the state of Ohio, we reduce your value down to 35%. If you're on CAUV, that's going to be a combination of your CAUV value, your any improvements you have, like a house or buildings as well. If you are not on CAUV, it's going to be your full market value reduced down to 35%.
The gross rate.
So the gross rate is the tax rate that you and your fellow citizens have voted on. So every levy that you vote on, all the millage that's applied to your property is in the gross rate. And that's not actually what you pay, but that's the total rate that would be applied to your taxes.
And then there's another term, the effective rate.
So the effective rate is what you actually are going to pay. The effective rate is all that gross millage that has been voted on in your local jurisdiction and then reduced down considering things like the tax reduction factor, which makes sure that those levies collect only what they collected the first year that they were on the books. So your auditor has to take a look at how property values have changed over the years and reduce that gross rate down to come to the effective rate. And if you multiply your effective rate by your taxable value, you'll roughly get what your taxes are.
One thing I want to throw out here, we've been talking a lot about the fact that in general, CAUV valuations are down by about 30%. Some farm owners are going to see different percentages because not everybody has the exact same tax.
Exactly. So within CAUV, we all have different soils, and different soils have changed at different rates. In addition, if you have a house or barns on your property, those are valued at their market value, and they're going to change depending upon how sales have happened in your property, in your area. Then the last piece of the puzzle is your tax rate and what you have voted on along with your citizens in the last several years. And if you've added a new levy onto the tax roll since the last time you had your value change, that will add to your taxes as well. So all those factors are going to affect and change what you might see in Franklin County versus Shelby County or another county out there.